Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Today is Friday, August 28th, 2026. Summer's just about over. Ron Quaranta here with my amazing co-hosts, David Brill, and our roaming correspondent, the one, the only, Joshua Klayman, somewhere in the wilds of New Jersey. It's good to see you both. Before we begin our usual disclaimers, for everyone in the audience, thank you so much for watching us on YouTube, X, LinkedIn Live. Obviously, nothing that we're discussing is any sort of investment or legal advice. And really the things David and Josh and I talk about are our own personal opinions, not necessarily the opinions of our respective firms. David, Josh, another week's gone by. There's so much to cover. David, you and I have been texting articles and stories double time, I think, all week long. David, what's going on, buddy?
Well, I think it's sell in May and buy in August. Bitcoin is up 25% in August. We've been bouncing up against 80,000, and this might be one of the most hated rallies we've seen, because I think a lot of people had wanted to buy it cheaper and buy both Bitcoin, Ether, and altcoins cheaper, and then all of a sudden, in 2 days it went up 10 or 12% or 15%. So we saw over 2 billion short liquidation event, which is highly unusual. And for the crypto folks out there, this has been a very healthy and desired bounce, besides not being able to buy lower. But there's a lot of economic data we'll talk about and how it all interplays.
Yeah.
So guys, I have a question. Like, why are we seeing the bounce to 80? Like, why 80 and why now? What are your thoughts on this?
Yeah, look, I mean, 80 has long been a very strong resistance point when you look at relative strength indices. Sorry, Josh, where prices and volumes bounce around certain price points. That's why, David, for example, and previously, David, you had noted if we break 62, we're in the 50s. It's a technical conversation, Josh, around what are the price points where volume of buyers outstrips volume of sellers. We broke 80 for a little bit. And David, you and I were joking about it in the virtual green room. There are going to be some people who see 80 and like, I'm out. I got to sell because I was trolling around in the 50s for a long time.
Yeah, I mean, if you bought in the low 60s and you're selling here at 80, you have like 25 to 30% in a couple of weeks, depending on when you bought. And, that's a great trade if you, time it right. So I think a lot of people want to take some off the table. And look, I think we're in a very interesting economic time right now. We have midterms coming up. And I really believe that the majority of people in the crypto space are very bullish about like the long-term prospects of crypto, but there could be a lot of short-term volatility. So I think people are really hedging here. And so I could see a lot of people taking money off the table here.
But is that why we're seeing it touch and go, do you think?
It sort of bounces around 80, right? Above or below it. Below it, it's a resistance level at certain price points where contracts, including the options contracts, the 3-month, 6-month, David, whatever they may be, as those executes, they bounce around those resistance support levels. I mean, David's a conviction holder, Josh. He got Bitcoin at $100.
I actually did get Ether at $10, but all joking aside, I think this has really been the most interesting thing, because I know so many people who, as it was climbing, nobody believed it would keep going, and so they were just waiting and waiting. But on the flip side, we're now seeing like a massive amount of money flowing into the ETFs. I think this was the best month for Bitcoin ETFs, I think, since 2025. And look, I think sentiment is certainly turning. We just have to see if it has staying power.
David, can I ask this question? And Josh, I'd love your opinion as well. We all thought sentiment was turning. I mean, there were a couple of catalysts in the past week or two, right? 3 of us spoke about regulation crypto asset. We're definitely going to be addressing that on this chat. Josh, full disclosure, WSBA will be submitting its commentary like so many other organizations. David, tell me if you disagree. I think the real catalyst was Treasury activity on the part of the Treasury Secretary Bessent. Because you mentioned the debasement trade, which is probably worth us talking about. I think that's a bigger catalyst than regulation crypto asset.
I agree. I think, look,
Can you guys explain why you think that, just for those at home?
Yeah, so a debasement trade is this idea that you basically sell government-backed securities because of concerns about increasing interest rates, inflation problems, and lack of fiscal discipline. And you replace the purchase of US dollar securities, treasuries, for example, with essentially hard assets or inflation hedges, gold and Bitcoin. And David, Josh, we've seen this playbook several times in Bitcoin's history where flee from monetary-based assets, go to hard assets like gold and Bitcoin. I think that's one of the things that's at play. And you also saw that, David, because it was priced down and yields up on the fixed income side.
Mhm.
It's not making a dent in the debt at all, or even the deficit. But I think that's part of what drove money to look for an alternative venue, Josh.
Yeah, and one other thing I would say is that, the Fed is in like a very difficult place because, GDP is like 1.5% decelerating from 2.1 in the first quarter. The economy is growing but slowing. Inflation is sticky but no longer accelerating. And consumer spending is resilient but cautious. So the Fed is in exactly the position it's been all year. Not enough progress on inflation to cut, not enough economic weakness to justify hiking.
Yeah.
So we're in this weird dynamic.
And the problem with that weird dynamic, David, is it always puts the Fed, aside from the conversations of Fed being influenced by the president and conversations about the new Fed chair. I mean, he's a very smart banker. He's been around for a Federal Reserve official. He's been around for a long time. It puts the Fed in this position of always ending up responding late, whatever their response is.
Mm.
And that always leads to uglier consequences. They just can't be proactive. And there's a real downside to not being proactive.
And what would you do, Ron and David, if you guys were the Fed chair?
If I were the Fed chair,
yeah.
Wow, this is a tough one. And it were not an election yet. I mean, it shouldn't even matter, David, to the point.
Well, no. Imagine we're in this year. This is our year. And you're the Fed chair. What do you do?
Yeah, on the premise that what I'm about to say would probably get me fired by the president at some point, I would probably remove language about a 2% terminal rate and reset the dialogue that the real terminal rate for inflation in the 21st century, after 15 years of free money, is 3%. And when you do that, you take a little pressure, you open the pressure valve a little bit on the things the Fed needs to do. I am sure I'm going to get hate mail for saying that, but David, tell me if I'm wrong.
No, you and I talked about it before. I mean, look, with the election coming up, I wouldn't put that out there now, but in December, I might put it out there that going forward for 27, we think the terminal rate should be 3%. I just think it's much more realistic. And I think you would get pushback for it, but I think if you did it after the election, I think that would be the time to do it. And he's new in the seat, so he could do it and take a new position.
So just a question, given that, like, I understand what you're saying about pushback, right? But given that we haven't seen 2% in quite some time, and given that it, as you noted, it does seem unrealistic. I mean, would the pushback be real? I mean, is it worse to keep saying we're aiming for 2% and then failing? No offense to the Fed, or its chair, but like, is at this point, like, pushback, but yet maybe achievable versus
Yeah.
missing?
No, look, I know where you're going with that, Josh. And again, the three of us have spoken about this. It's important to remember that those decisions by the Fed also inform economic and strategy decisions by overseas buyers of US treasuries, by corporations that are funding CapEx. And David, I'm thinking about the hyperscalers that are going out to the fixed income market and borrowing hundreds of billions of dollars. You can imagine they'd be doing some scenario analysis that says I should buy at 3%. A 100 basis points difference in what the terminal rate target of the Fed is may mean people spending tens of billions of dollars or more in interest over 20-something years.
I mean, that's true, but and I totally agree with that. I just think that realistically, I don't really see how we can get to 2% anytime soon. And in fact, I think in some ways, AI is going to make us more efficient, but in the short term, it's more expensive. And you can see that from all the
Sorry, bug
investing.
bit me.
And you can see that from all the, investing and borrowing that these companies are doing.
Yeah.
So I think if there was ever a time to take a bold stance, I would say in December would be a good time to do it.
Yeah. I mean, David, the other side of that conversation as well is you brought up AI. When we look at, if we're looking at turbocharged economic growth, saying the inflation rate is going to go up to 3% as our terminal rate will probably dampen some of those estimates on economic growth going forward, right? And I think there's a market's expectation of not talking about that.
Yeah, no, I totally agree. But look, these companies are really, really profitable, and at the high end, we're seeing gross margins like Nvidia's is over 70%. Some of the memory chips are in the 80%. So, if their borrowing costs went up 100 basis points, sure, it might dampen those profits a little bit, but they would still be really robust.
Yeah.
So I think like on the high end, I don't think it would impact it so much. I think on the lower end, you'd feel it more in borrowing.
Well, what
rates.
about like housing, like mortgages and things like that?
Yeah. I mean, so I have definitive opinions on real estate. I don't think look, there's the K-shaped economy, and there are some people who can't afford the mortgages that they'd like to afford, and that's an entirely different conversation. We have a housing shortage in this country, ultimately, and the government's doing everything it can to get in the way of private enterprise fixing the housing shortage.
Yeah, I think the problem is in major cities, it's so costly to build, and there's just so many taxes and labor and everything is so costly that even if you want to build affordable housing, you really, literally, the government has to help support it or subsidize it because the actual cost of it is prohibitive.
And I'm going to go soapbox on this, David, because, and again, I don't want to bash the New York City particularly or any other city, but the truth of the matter is rent control kills the ability to build new housing. And, I don't want to have that conversation about billionaires and millionaires are bad and all of that, but government intervention in housing has proven to be a drag on new house building for generations. And no one seems to get that.
Yeah, I agree.
Soapbox done, Josh. I'm
sorry.
Agree.
I do think we should pivot back to crypto a little bit, but I do agree with Ron, and I do think, look, the rents in Manhattan are crazy. It's like $5,500 average for a one bedroom. I mean, it's just untenable. And so, go ahead.
Sorry, just quickly on that point about rent control. I happen to have been perusing on realtor.com or one of those sites. And I was looking, they had some like really seemingly affordable apartments to purchase. And then when I read further, because I was like, this is bizarrely affordable. It's because they're rent controlled. And the monthly maintenance and taxes exceeds the rent that you're allowed to charge.
Yeah.
Which is so crazy. So it's like basically, I guess, a long-term hope that the person doesn't bring in a younger relative or someone like that who then continues.
Yeah.
Anyway.
It's all about incentives. But I'm curious, David, I mean, the condo on Park Avenue South, you got that at a pretty good price a few years back, though, right? I had to do it, Josh. I'm sorry. He queued it up.
Look, all I will say is that I can tell you, I already know 2 or 3 people, friends of mine, who have put their apartments up for sale and are coming to Florida. So I think you're just going to see that trend continue as people, don't want to pay the taxes, don't want to have inheritance taxes, don't want to be taxed, on maybe having a second place in Manhattan. And, I think people forget that people who have the most mobility have the ability to, move their feet. And so you've seen that in California and you're seeing it in New York. And so there's going to be look, I'm born and raised in New York. I love New York, but you're going to see a reckoning. You have economic policies that are just not consistent with how a city should be run. And there's going to be consequences for it.
Josh, David, do you mind if I pivot to something that I mentioned a bit earlier? Because Josh, I definitely want your opinion on this. And the reason I'm bringing this up is We had one of our WSBA networking receptions in New York this Wednesday. We missed you both, and it was a really great conversation. But I'm getting more and more feedback, Josh, when we look at regulation crypto asset from the SEC, and I get it. It's 400 pages. I've started reading through it. We're going to be submitting a commentary. But a not insubstantial number of people have told me that they're not really particularly happy with it. And these are pro-crypto people. On the basis that it's going to cause more confusion and potentially legal action post-invocation and post of this becoming a rule. Josh, are you hearing the same thing? I mean, do I not understand what the SEC is trying to accomplish?
I mean, I've been hearing that as well from people. I've been seeing it in people's posts on LinkedIn, and I think
Yes.
some of our friends and colleagues may have gone on podcasts or something like that to discuss it. I mean, I definitely think where there's ambiguity, there's, how can I put this? To me, this is a huge step forward, that we're getting this proposed rule, and there's opportunities to voice concerns about this. I think this also underscores why, and this was said in the release by Chairman Atkins and also in a companion statement by Commissioner Peirce, saying long term, we want to have federal legislation. We want to have the Clarity Act. But I think what we have to bear in mind is that in the absence of federal legislation and in the absence of case law that's changing things, we're stuck with the Howey test. We're stuck with, and I shouldn't say stuck with, I mean, well, I guess it's what we have, and we have Howey and its progeny, and we have other tests that are judicially created, and we have a body of case law that came out, during the enforcement era, some of which is not particularly favorable to crypto. So I do think, what the lens through which I've been viewing this crypto assets is that, we got guidance in March, and it carved out certain specific types of assets and activities that would not or should not involve or may involve transactions and securities. That noted, that you could still have an investment contract. And so I think this is addressing in part that, it is saying, hey, here's a way that you can get out of it. Now, what I will say, and I think this also goes to the point of why, some people didn't like it then, they don't like it now. Some of the things about how you get out of an investment contract, such as fulfilling all of the essential managerial promises, I mean, that's consistent, frankly, with what we did with Polkadot back in the day, right? In terms of looking at that. But I think in the March guidance, the SEC had said you either do that, right, or you publicly abandon. And so I guess some of it I would just, I mean, we're not going to have a perfect solution. I do think also one point that I do think would be helpful, but maybe it's a non-starter. There must be a reason why they didn't include it, and perhaps it's that the SEC is going to give separate guidance about broker-dealers and exchanges, right? But that lack of preemption and lack of addressing what happens for purposes of the secondary market and these players, I mean, we've been seeing just, in practice, that some states have taken positions that are very different from the SEC in terms of whether there exists a broker-dealer, whether staking involves an investment contract, all kinds of things. You'd be really surprised, or maybe not. So I do think that's somewhere to go, but I do feel like people have raised valid points. But again, as we know from when we went to see the SEC and Commissioner Peirce a few years ago now, one of the things we were asked is, well, how would you deal with Howey? And I think that's what we're trying to do.
Yeah. Josh, David, can I ask one more question about that? I'm curious, David, about your input on this. As a non-lawyer, I looked at the exemptions they put forward, and I'm definitely going to screw these numbers up, David. I think it's $1 million over a year, over 4 years, and $75 million within some type of registration scheme. I mean, they seemed generous to someone who's a product person, financial markets person. Is it realistic, David?
Look, I do think it's realistic, and I think those caps are put in place to sort of limit retail exposure. So retail would have
Right.
some exposure, but not too much exposure, and institutions can have some exposure, but the company can't raise too much money through this.
Yeah.
We've all been asking for a safe harbor, or the majority of people have been asking for a safe harbor, have been asking for a framework from the SEC. And look, I think they did a pretty good job. I think, Subpart D might be one of the most consequential provisions in the whole proposal,
Mm.
and something, really documented path for a crypto project to become, fully decentralized and not be a security. And, so I think that's really important. And look, the great thing about it is there's 60 days for people to respond. I think we'll have a lot of thoughtful responses, and then we can see what they come back with. But look, in my eyes, we should have had this in 2018 or 2020.
Yeah.
We are 6 to 8 years behind, and so this is better to have it now than not have it at all. And I
Yeah.
agree with Josh. There is ambiguities, and we do need to fix the state and federal issue. But ultimately, we need a framework, and I think this has been a good proposal, and we'll see the comments that flow from it.
Yeah, and David, Josh, I agree with you both. I think the one interesting thing, and again, David, I do this a lot. You and I talk about this. I'm not bashing media particularly, but I have seen some commentary from colleagues, particularly the not friendly, crypto friendly folks in the space, in banking and law, for example, who, oh, this is going to open up a new era of ICOs, and all of these investors are going to get hurt. I've pushed back on that repeatedly since regulation of crypto assets came out. I just don't see that, given fraud is fraud. Bad actors are going to be bad actors, and bad actors will be prosecuted.
And also the amount of money, there's a lot of procedural, things you're going to have to go through.
Yeah.
You're going to be making filings with the SEC. I don't think you're going to want to be onshore here doing those kind of things and have bad intentions when you're going to be right under the nose of the commission. And also you just can't raise enough money in this, maybe 75 million, but the limits are low enough that it's not going to encourage that behavior. And I'm sure when this does get enacted, if we don't get clarity, that a few early people will be made examples of if they're deviating from what's been passed.
Right.
So, I think the last thing is, look, so much has changed in all these years. And I think it's refreshing to take a fresh look at it and come up with an approach that, reflects what, is on the ground in 2026 and beyond.
Yep. Josh, go ahead.
Yeah, I was just going to say, I mean, if we had another ICO boom, and if it took place in the US, and if it took place with the understanding that if you're capital raising, US laws apply, if you have US persons, right? Or various other things that I won't go into under the law. But if we have the idea that, okay, if you're capital raising, it's going to be an investment contract, why wouldn't we want another ICO boom? I think another ICO boom would be great. I think the challenge with the last ICO boom was that there was no framework, that people, I mean, even well-meaning people, they went to other countries, including Switzerland, and they formed foundations, and then they were advised, apparently, that US law didn't apply. So, but I think the kind of energy and vigor and creativity that we saw during the ICO boom, I mean, most startups fail, right? And I think, isn't that kind of what, in a way, obviously, other than TradFi and crypto becoming one, when we say we want to be the crypto capital of the planet, I mean, don't we want that innovation here?
Josh, it makes me realize I sort of fell into the trap of saying ICO as a negative. There were actors in the era of ICO that were bad actors, but to your point, and I fully agree with you, if this opens the door to innovation with a framework that helps with compliance and helps with investor protections, you're 100% right. Well said, Josh.
Thanks, Ron.
Yeah, no, I agree. We spend so much time advising our clients how to, contort their way out of having, the nexus to the U.S. and geofencing U.S. citizens and all of these things when we could have been, really innovating and helping the companies innovate. there was so much money spent on legal fees and consultant fees just to figure out ways to have a viable product that didn't have a nexus to the US.
Yeah.
And then, like if you look at Telegram, they had a minimal nexus to the US and, they got, shut down. They had a TRO filed against them. So, there are real consequences. And so we want to be a place where people can innovate. And look, we need to be a place where people can innovate. Look at all the laws in other countries. You have, MICA, you have VARA. Even Russia has put in a full, has like meaningful crypto legislation. So we really need to catch up. And so I think that whether we get it from, Clarity, which unfortunately right now there's about a 18% chance of passing on Polymarket.
Do you have Kalshi up on your terminal right now?
Well, every Friday I look at all these things so we can give our listeners like the most up-to-date info.
Indeed.
But right now it's at 18%, but I would say Project Crypto is probably much, much higher if somebody was to bet on that because, we have a motivated SEC and we have a public that will give robust comments.
The one other thing I wanted to add to, I'm sorry, Josh, go ahead.
I was just going to say, like, if we have that percentage likelihood of clarity, do you guys think that this bumping up to 80 touch and go, that this is going to be sticky and that that's already priced in that? Or are we likely to see real movement once we know for sure about clarity?
I will give you my opinion based on nothing, Josh, but if Clarity doesn't get a cloture vote on September 15th, and we shout out to Adam Goldberg and several other members of our working group who told us about this, and that means it's dead, I think we sell off. I don't think we sell off 50%. And the reason for that is I think we're starting to see that, SEC framework. CFTC, we need to talk about, David, who came forward with, here's the thing we're planning post September 15th. There's something the industry can work with. Clarity would be ideal from a political perspective, but there's something the industry can work with from the regulators.
Yeah. So I would say that I don't think it will affect the price of Bitcoin and Ether because we have more certainty around that. Bitcoin doesn't need clarity, but regulated entities that want to do business in this space need more clarity, especially the compliance departments and the chance that you could be audited and have issues being audited by your regulators because there isn't clarity. So,
David, we've got to let Josh go because apparently her battery is dying at the vineyard, and I want her to be able to get an Uber. Gift for her next birthday is several battery packs.
Yes,
Josh,
seriously.
It's good to see you. Have a great weekend. We'll chat soon.
Thank you. You too. Thank you, everyone.
Bye-bye.
Bye.
I just didn't want her battery to die, and she's stuck in the middle of nowhere.
Sure. So, and I want your input on this, but I really think it doesn't affect Bitcoin and Ether. I think it could affect, the altcoins because look, I think Charles Schwab announced the other day that they're going to be offering Chainlink and 2 other tokens to their, clients. And I think the more clarity that regulated entities have over the status of a number of the token projects, the more that they can offer their customers.
Yeah, I agree with you 100%. I think that the kind of crappy alts that are out there that have no use case will not be supported by what you and I are talking about vis-a-vis SEC and CFTC and regulation and crypto frameworks. And ultimately, I think that might be a good thing.
Look, I mean, obviously, as a free markets person, I believe that, people have the right to, create projects, sell tokens.
100%.
But, obviously, because crypto is so different, the non-crypto exchanges are going to be more judicious in what they offer, what tokens they offer their customers. And so I think that's a good thing. But I also think that it's important, that there's still places to buy all the different tokens that people want them to buy. And
David,
so,
I wanted to lean in. Yeah, I'm sorry. Go ahead.
No, I was going to say, so I think that's important too. People should have choice. I'll say the last thing is, there are certain token projects, people that make money, that have revenue, that do meaningful things, but people have a difficult time accessing, and people want access to those.
Yeah, and they should have it.
Yeah, I remember
reasonable people should have access.
Yeah, and people were using VPNs to buy on exchanges outside the U.S. to get access to them, and we should have access to it. And the last thing I'll say is, there are a fair amount of projects that used to have jurisdictions that couldn't participate, and we would be listed with like North Korea and Iran and some of these, sanctioned countries because people didn't want the exposure to the US. So it's time for that to change.
It was always weird for me to see our United States next to North Korea on a product offering disclosure. David, I wanted to raise one other thing, and I'm going back to regulation crypto assets from the SEC. We talked about one of the important features there being federal preemption. And, I wanted your thought on this. Lately, when you look at some of the states that are anti-crypto states, and I use that term loosely, but I'm thinking, shout out to Renato, Illinois and digital asset taxes. They're very eager. Some of them are very proactive in suing platforms. I'm thinking prediction markets that they don't like. Do you think they will redouble efforts in the wake of regulation crypto assets as we see more platforms launched in the United States to stifle that? I mean, we've got a much more interventionist series of states in the United States now, and I'm concerned about how that might play out.
So I think we need to look at the dynamics. So why are the states, fighting so hard with prediction markets? One of the things is revenue that those states won't get, taxes that won't be paid. And the second one is, consumer recourse. Like, I think typically the states say, oh, we're protecting customers and this and that. And to some extent they do, some states better than others. But I think you have to keep your eye on the prize, and that's revenue and dollars. Because look at what they're doing in Illinois. They're charging a tax on transactions. So it's not that we're saying, it's not that we're saying, they're saying that, oh, you can't do these transactions in Illinois. They're just saying, hey, we have a huge budget deficit in Illinois and we need to plug it. So our pensions are massively underfunded, so we need some revenue, so we're going to tax crypto transactions. And look, a whole consortium of people have come up against it, some of the trade organizations. Renato has spoken out against it, and I think it will go away in court proceedings over time.
Yeah. I mean, the problem is those court proceedings cost money and time and resources. And it's interesting to see, I haven't mapped it, which states with significant budget deficits are the ones going to court on these platforms.
Well, all right, we'll keep it non-political, but a lot of our largest cities have underfunded pensions, are in deficits, are spending more than they take in, and so they're looking for revenue from anywhere. Yeah. I mean, you see that in New York City.
Absolutely.
And look, there's a political element to it too. I think a certain cohort really still looks at crypto and they tie it to the president, they tie it to Republicans. And so, I think like J.B. Pritzker is probably posturing for a potential 28 run. And, we're striking back against crypto. But, a more thoughtful approach would be a more welcoming, like, hey, we want jobs in crypto coming to Chicago. And we want to create an environment that supports that rather than sort of, taking a sort of pot shot at crypto and now being tied up in litigation.
It's easy, it's quick and cheap political points for those who oppose crypto in the aggregate. David, I wanted to also talk about, we didn't really spend much time on it, Commissioner Seelig over at CFTC. It's interesting because if you remember when the first meeting about regulation crypto assets by the SEC was canceled that Friday, several of us, and I'll confess, myself included, fell into the trap of they must have gotten some pressure, or some trade association was going to sue, or maybe it's politically motivated. 3 days later, Chair Atkins and the commission put it forward. But the CFTC chair has been very clear that post September 15th, the CFTC will act on its own, in its own regulatory authority, to create guardrails around crypto. Is that as aggressive as you thought it should be?
Well, I'm going to stick to my view that this is 4 to 6 years too late. And so should have been, I shouldn't say too late. This should have been done 4 or 6 years ago. So I understand, taking the position that we're going to have a structure in place and propose rules in place if clarity isn't passed. I think it's a very responsible approach the SEC and the CFTC are taking. they're letting Congress, have an opportunity to pass a law that's there. And if
Yep.
they don't pass it, they're going to fill in the void by creating rules and regulations around it.
Yep. Which is what we would have wished happened, politics aside, in the prior SEC and the prior CFTC. It would have, you and I have argued that would have saved a lot of people who lost money a lot of pain.
Look, not only that, if we had ETFs earlier, there would have been less money on foreign exchanges. Some argue that if we had more robust rules in place, FTX wouldn't have happened. So,
Right.
I think this is a very responsible way to think about, rules and regulations for our industry. And I think it's a very, intelligent, measured approach. There's a comment period. I'm sure a lot of people will submit comments. So I think, look, this is the way laws and regulations should be done. And the good thing is we have an opportunity to have like optionality. If Congress doesn't act, we have, the SEC and the CFTC will fill in the void.
Yep. Yeah. And I think that's very, very important. David, I haven't looked, if we switch back to markets, I am stunned that the macro geopolitical conversation is front and center in the news. But my sense is that crypto and even broad equities markets, for example, have been muted in their response to some of the things that are going on. And we've got a VIX below 15, David.
Mm-hmm.
I'm a little surprised by that, to be perfectly honest. And we don't have, a clear picture on what's going to happen in the Middle East. We don't have a clear picture on where gas prices will be, heating oil prices as we come into the fall and winter season. Is the market calmer because I'm missing something, or are they not worried enough?
Well, look, I think the reason why we got this rise is that, as you said, the debasement trade is
Yep.
Back, and gold, rose, Bitcoin rose, assets are rising. Look, I think there's a view, if like you look at core PCE and it's the same, since the Iran conflict began. So
Right.
I think there is reason to sort of take that position. I think also the US is more insulated from this than other countries.
Yep.
Like refining oil will cost more, but we're a net exporter now. So I think
Yep.
some of these costs, may rise, but we're less impacted than other countries are. So I think that's sort of my view as far as the US goes. And like I said, I think hard assets have seen a rally, in the debasement trade, and Bitcoin's, benefited from that.
Yeah. And I know we talked about it. I'm still stunned by this statistic. We are the largest net exporter of oil in the world. Like, we're 30% of the market, and that's astounding. That's a lot of energy output we create.
Well, listen, we have to give our country credit. Like, clearly we had issues in the 70s and the 80s, with oil embargoes, people, having to get gas like on odd and even days.
Yeah.
And like, I think as a country, we realize that that's not the way we want to be. And we dealt with it. So I think, we have to give our country credit that over time we've drilled, we've taken measures so that we're self-sufficient.
Yeah. David, I'm sorry, go ahead.
The last thing I was going to say is, look, we can't underestimate the electric cars, and that's starting to make an impact on how much oil we need in the country.
David, I remember you made me flash back to 1975, waiting for gasoline on an odd day with my father because of the license plate number or whatever, and the offer was, do you want leaded or unleaded?
Well, look, I think if we looked back till then and then people were like, oh, this should never happen again, now we're in a position where it's not happening. So
yeah, no, fully agree.
I think that we're, in the global economy, we're very well placed. I think the issue more is, what is the rising cost for shipping goods and for energy, and how does that affect? Even though we're not impacted as much as other countries, we're still impacted enough that it makes a difference.
And this is a human conversation as well. And you and I have said that many, many times. Yeah. I mean, there are people not getting fertilizer for crops. There are people around the world not getting food shipments because they don't have a lot of domestic production of food sources. So it is still a challenge. And I think, David, the longer term issue, and again, you and I have spoken about this, and I don't see anyone coming up with a solution, is our debt and deficit.
Yeah.
I mean, the markets are truly underestimating. The longer that takes to fix, the harder that boom's going to be. And I'm hoping I'm not around to see it.
I think we need to have like a come to whatever your religion moment. We really are we're spending too much money.
Yeah.
And we have to find a way to, like on a state level, on a city level, and on a federal level, we have to really rationalize our spending.
Yeah.
And so like as companies are using AI and other things to become more efficient, can our government on a federal and a state level become more efficient and like spend our dollars more carefully? And I think the last thing is, we don't know how much waste is out there, but the idea of a Doge should be
Not the
something.
token.
What?
Not the token.
No, not the token, but the idea of like reimagining how we spend money in our government and eliminating waste should be something everybody can rally around. It just has, it has to be done in a way that I think that the majority is comfortable with. But the idea that we can't track all the payments we make, or we're making payments for very bizarre things or things that we shouldn't be funding, like we literally, really have to turn off the spending. We're addicted to spending, and we've got to cut back.
David, as as we talk about this, we have a friend who looks at the reason for these deficits and debt is the tax cuts. And again, I want to avoid the politics of it. And I know I keep saying that. So I did do a little research from a nonpartisan data source. And in general, since 2008, government revenue has increased 18% every year on average. No matter what administration, no matter what president, on average, across that same time span, government spending increases 24% every single year. And it's not a political conversation, it's a math conversation.
Yeah. Like what company could get away with like a 24% increase in spending in it every year? Like what's their return on invested capital? And
what's the negative ROI? Why would you invest in that?
We really have to rationalize how we hiring, what staffing should look like, how we're spending. It needs to be revisited. And I think the problem is that our society has become fairly polarized, so that there's, you don't want to be the party that took these, risks to really rationalize our expenses because you feel like you're going to pay for it at the, next election.
Yeah, and it also gets marketed as you're taking away money from senior citizens, you're taking away food from babies. It's a very polarizing topic, and I don't want it to just. And I don't know, we're not really talking crypto, but we're talking the broad macro that ultimately affects crypto and so much else, David. It's not just the cut spending, find efficiencies, which is critically important. There is an argument that we can grow out of some of these things.
Yeah,
how do we do that? Is the question.
Well, look, like this backlash against data centers and things like this, things need to get rationalized. We're going to need these things. Like this is going to be what future life is, and you have to get on board with it. And I think idealism is getting in the way of pragmatism. And I think that ultimately, like, we need to be on board with these things. And I think there'll be a lot of opportunities for people. People can be retrained. A lot of people have learned how to. There are a lot of courses out there. There's, you can learn how to prompt. I've taken some courses online, and I've played around with it, and people can reimagine their careers. In a way I don't think you could have years ago.
Oh yeah, the freedom we have to change our trajectory on a person by person basis has never been greater. 20 years ago, you and I couldn't have these conversations. 50 years ago, forget it. You were in your job, and that was the job you kept no matter what.
And so I think there's tremendous opportunity. And I just think, look, this does have a correlation to crypto, because if we can't figure out how we spend and stop being addicted to spending, crypto is going to benefit from that, and it's going to continue to go up, and so will gold. So at some point, somebody has to, collectively, if you don't want to like lower entitlements, at least make sure that the spending you're doing is just, efficient, that you're not wasting money, and rationalize.
Yep. David, I'm going to close with one last thing. I believe that data centers in space is the actual solution.
It's really funny. I have some closing thoughts too after this.
Go for it, please.
But, I was really skeptical about it. I was always thinking like, well, how are you going to actually build it? And how are you actually going to transmit it? But it seems like, there's possibilities. But we also don't want our, the solar system to be filled with, junk flying around after it has its useful life. But
space is a very big place. But I certainly don't want the atmosphere of the Earth filled with, 18-wheel size, thousands of 18-wheel size platforms.
Yeah.
It's a crazy time, my friend, but it's sort of an inspiring time too. There's a lot of really fascinating stuff happening.
Yeah, I'm very inspired with what's going on and the possibilities. And, look, I think work is going to be reimagined in the next 10 years. And I think we're very fortunate to be in this environment.
Absolutely.
But I did have a few closing thoughts I want to share with you and our audience. So, the show in late June that we did, Bitcoin was at 58,000 and the regulatory landscape felt frozen. Today we're doing a show, Bitcoin's at 79,400. Institutional flows and ETFs are at the highest since October of last year. This PCE that keeps inflation sticky and the Fed paralyzed, a GDP slowdown that looks increasingly stagflationary. And, we have a Clarity Act, with 15 to 20 days to go with an 18% chance of approval. I think that the macro environment that's been Bitcoin's headwind all year, dollar strength, high rates, tight liquidity is beginning to reverse, and we've seen it in the price. Yeah. And so I'm really curious to see, if we do see a rate increase in September, which I do not believe we'll see, and whether Clarity gets approved. And I think it's a really exciting time to be in the space.
I agree with you 100%, David. I also agree with you that we will not see a September interest rate increase. I could be wrong. I want to throw a new data point, David, that I've been tracking. I'm going to try to create an unofficial index of it. And we've had colleagues that have mentioned this before. The number of crypto-related job postings on LinkedIn from traditional finance firms.
Yeah.
There's a correlation that I'm pretty sure we can mathematically figure out. But in my experience, a rise in those job postings is 3 to 6 months behind major moves up in crypto. We will see how it goes. There's been a lot of job postings on LinkedIn.
And I think, if Clarity gets passed, you'll see a lot more from the regulated entities.
Yeah.
I think there's a lot of money waiting to be put at work and waiting to see what's going to happen here in the U.S. And so I think there's a fair amount that's on the sidelines, really just waiting to see how it gets deployed. I mean, David, I think, I really think if our government can coalesce around Clarity, figure out this ethics issue in a reasonable way, and we get it passed, I really think this could be another boom in our industry. And I'm not talking about prices necessarily, although I think they will go up meaningfully, but in general, I think it'll be another real boom, a boon to the industry.
David, I'm with you, buddy. We got to end it there. For everyone in the audience who joined us, thank you so much. If we missed anything you wanted us to talk about, or if you have had any suggestions for next week, email David and I, info@wsba.co. David, my friend, have a good weekend. Lots of work coming up. You're in New York City next week, yeah?
Not next week. I'll be in the week after, but I'll be enjoying, this weekend in Florida. It's beautiful here today, and I'm looking forward to a great weekend.
Enjoy the beachfront compound, my friend, and I will see you next week. Take care, everyone.
Bye.
Bye.